Hello everyone. This is the pre-market report video for today, April 20th in the Indian stock market in terms of Nifty and Bank Nifty. Quickly, let's discuss what happened yesterday. For the third straight day, Nifty closed negative, but the positive thing is it traded in the very narrow band. Throughout the day, Nifty was always negative, but the difference between the day's high and day's low was less than 90 points, which means it's just 0.4%. It's kind of nothing. To be honest, at present, the whole global momentum itself is directionless. There is no market impacting news or events to look for, and Nifty's decline was mainly due to that no one wants to take fresh position, as most of the Nifty 50's major stocks quarterly results are due before next Thursday. Sector-wise, still IT stocks were dragging Nifty down as the whole sector dropped over 1%. In addition, yesterday, PSU banks turns dragger. Day before yesterday night, Indian government reintroduced the windfall tax for locally produced crude oil, and this is clearly negative for oil stocks, but somehow still Reliance traded positive for most of the time and closed positive. Regarding institutional activities, the overall impact was insignificant as both DII and FII together the net sold for only near 125 crore rupees. Then after the Indian market has, European market too closed similar. Both France and German index closed very marginal positive, whereas UK and whole Europe index closed marginal negative. Coming to US, the story is not so different. Both S&P 500 and Nasdaq closed near absolute flat. However, Dow Jones dropped by 0.23% as it was mainly dragged by Disney. At present, Disney is caught in between the American politics. Apart from that, all impact on US market last night was just quarterly results based one. In the last pre-market video, we discussed in detail about the Netflix result as the result was announced in the aftermarket hours, and in reaction to that, last night Netflix dropped over 4%. Whereas Morgan Stanley results beats the analyst estimates, so it turned positive. Regarding oil, US inventories decline made it to drop over 2%. At the time of this video, WTI crude oil was traded near $79 per barrel and Brent crude oil was traded near $83 per barrel. However, Indian ADRs in US market had a terrible day. Wipro dropped over 2%, Infosys dropped another 1% and ICICI Bank was down near 0.5%. In conjunction with Indian market, only HDFC Bank closed positive of 1.5%. About SGX Nifty, at 3 am Indian Standard Time, it closed at 17,695, which kind of indicating the gap up opening of over 50 points. Here, I like to convey one general info. For those who don't know, earlier this week, Singapore Exchange issued the circular that from July 3rd onwards, SGX Nifty is going to be delisted. In case if anyone holds SGX Nifty position, then that will automatically convert it into NSE's SGX Connect, which is the dollar-denominated Nifty derivative contract, and this will not trade on Singapore Exchange, rather than it will trade on NSE's International Exchange. I hope I'm not confusing. So this is what happened in global market. Now let's move on to the India-related info. First, regarding Adani Port, yesterday in the aftermarket hours, they said that they are going to discuss and get approval from their board meeting on April 22nd for considering the buyback of their debt securities. I think Adani Group is trying to increase the investors' confidence, but until there is an actual buyback and actual filing about the buyback with SEBI, I don't think investors will believe to those news. Then the second news is about palm oil. For the May month, India cancels over 75,000 tons of palm oil purchase. Instead, they opted for other softer sunflower and soy oil. I'm guessing FMCG companies are doing this to improve their margin. Will it work? Only time has to tell. Anyway, this purchase reduction is for May month, so we can see the impact only on next June quarterly results. The third stock specific one I like to highlight is that yesterday RBI allows the AU Small Finance Bank and Equitas Bank to deal with the foreign exchange. I consider this as positive news since it might bring new business opportunities for those two banks. Here they mentioned that it's subject to compliance approval. So in future time frame, if there was a roadblock in getting compliance approval, then that might affect negatively. But for now, this new RBI approval is positive. As a summary, US market closed flat to mixed and Indian IT stocks still bleeding. However, SX Nifty is indicating the positive 50 points gap up opening. About Reliance, it's very confusing. It closed positive on Indian market but down by near 0.8% on GDR. Then about the things to look out, today the earnings results of HCL, ICICI Life Insurance and Reliance Industrial Infrastructure are due. And in terms of macro, before the market opening, Chinese interest rate decision is due to release. The expectation is to keep the same interest rate. By any chance, if they reduce the interest rate means, then it will make the metal to positive and got the huge potential to change the global momentum. Then during the market hours at 11:30 am, Germany's producer price index. In simple terms, wholesale inflation is due. Here, after reaching over 40% in last September, now for the first time the expectation is less than 10%. Finally, in the aftermarket hours, various US related data such as number of house sales data, Philadelphia's manufacturing index and usual weekly job insurance claims data. Just for info, yesterday again UK's inflation comes above 10%. However, Europe's consumer inflation drops to 6.9% from 8.5% a month ago. Coming to technical, on daily chart in the last 3 days, Nifty forms a 3 consecutive bearish candle that have opened within the real body of the previous candle and closed lower than the previous candle. This candlestick formation is called 3 black crows. During an uptrend, this pattern generally used to predict the bearish reversal, which suggests that the market has been at a high price and investors are beginning to compensate for it. Here, this pattern is more significant if it appears after a mature advance. I mean, the market has been at a high price for the long time. But that's not the case here, so it can be a false signal. In addition, in the last 3 days, every time Nifty was defended at 17,600. And if we see those candles, first one is bigger long candle, then the second one was relatively smaller than the first one, and the third was further smaller than the second one. So it's indicating 2 things. One, there was a reduction in volatility and thus the sellers, and the second one, every time Nifty drops below 70,600, there were enough buyers who buys on dip. Because of that, now 17,550 to 17,600 becomes the crucial junction. And technically the uptrend is still intact and still Nifty got the potential to move over 17,800 to 18,000. However, a decisive fall below 17,575 can trigger the panic button and will push it further down towards 17,400. In case of Bank Nifty, it's very similar to Nifty. Like how 17,550 is very crucial for Nifty, similarly for Bank Nifty, it's 41,750. I mean, any decisive move below 41,750 will trigger the panic button. However, as long as it's above 42,000, Bank Nifty got the potential to move towards 43,000. Regarding moving average, in addition to both 5-day and 100-day simple moving average, Nifty drops below 10-day simple moving average. However, the summary is still buy signal. And the technical indicator summary was still a strong buy call despite the RSI value dropped from 59 day before yesterday to 55 yesterday. About Bank Nifty, it's much stronger than Nifty since both moving average and technical indicator summary was still a strong buy call. Here too, RSI value dropped marginally to 67.5 from over 69 on day before yesterday. Moving on, from change in open interest chart, unlike day before yesterday, more new number of put options were added at below 70,600 and some put options unwound at above 70,600. In the same place above 17,600, more new call options were added. 17,500 got the maximum new put options, so 17,500 is the support to look out for. Then from overall options open interest data, 17,700 got the maximum call option open interest followed by 17,800. Thus 17,700 is the immediate resistance and 17,800 is the strong resistance. In case of Bank Nifty, based on change in open interest, some put options unwound between 42,300 to 42,500 and some new put options added at below 42,000. Whereas comparatively more new call options added at above 42,100. Moving on, by overall options open interest data, 42,000 looks immediate support and breaking that 41,500 act as a strong support. Similarly, 42,500 got the maximum call option open interest. So 42,500 is the immediate resistance. Breaking that 43,000 will act as the strong one. Today is the weekly expiry day. If not, we might expect the narrow trade. But most of the time, expiry day will bring the volatility. So if it is, then both Nifty and Bank Nifty will break away. It's either of the immediate support or resistance. If there is no new impacting negative news today means, then that volatility most probably will move in the upward direction. Here, please note, it's just my opinion and I can be absolutely wrong. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.